Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Thursday, June 9th. Firstly to dollar yen, and here we see a continuation of the trend to the downside today. This current candle is the second last one on the chart. That's the one that has completed trading. We see formation of a very small bodied candle as the trend had been moving down, suggesting that the previous net momentum between the open and the close is no longer in the market, suggesting that the strength of the sellers is certainly starting to wane. A large shadow on the bottom represents the sellers losing commitment down here below this 107.40 level of previous support and resistance. And the type of trading activity that we're seeing here is very similar to what we've seen previously when we last tested down below here, with a series of small body candles with larger shadows on the bottom, highlighting strong buying coming in down around this region. And this is no different. The buyers have closed with control today, suggesting good potential for a change of trend, and we are actually seeing buying in this new session as the market trades higher and through the previous high, changing the trend to the upside. Potential resistance at 107.40. If we can break out through there to the upside, we could see dollar yen trading up to about 108.24, but we do have a bearish market in all three timeframes still, but the Chica span is within the corresponding price action, so it's failing to support the bearishness that we're now seeing in these three timeframes. But looking at longer term, bigger picture, we are still trading down below that Ichimoku cloud with a negative market. But over the last month or so, we see the market starting to consolidate with a very wide range here, but this dynamic downtrending activity that we've seen previously is no longer in the market, and we have this very large range extending from about 111.84 down to this 105.45 level. Just looking to our bands, and following the bearish breakout, we haven't seen any strong bearish follow through yet to convince that we are going to see continuation of the trend to the downside. If we do see the market attempt to rally, looking to that upper band to hold as resistance 107.67, if we close within the bands in a bullish manner, we could quite easily end up trading back to the middle of the bands around 109. To the hourly charts with dollar yen, and here we saw previously for today's activity, the market trading down below each of the Ichimoku indicators, initially finding support at the first pivot point support level, bouncing off there, testing almost to the second pivot point support level, but not quite getting there. The formation of a weak doji candle suggested that the sellers were really spent for this second time frame downtrend. And we then saw the market rally in the first term time frame off that doji candle, and then forming a series of higher peaks and higher troughs as we traded through the Tenkan-sen indicator, giving us a bullish market in that short term time frame. It did suggest that there had been a significant change in sentiment in the short term time frame, and when the Tenkan-sen held as support, it suggested or confirmed really that sentiment had changed significantly. We then ended up trading through the Kijun-sen indicator, trading through to the Ichimoku cloud to give us a neutral market in big picture terms by trading within the cloud. And we see that we are continuing with the cloud, within the cloud, with the bottom of the cloud holding as support, the top of the cloud holding as resistance, and we will be looking for a breakout in either direction. Now, if it's to the upside, and if we see some strong bullish follow through, we could easily trade to the first resistance level, 107.40, possibly to the second at 107.73. And just down below the bottom of the cloud, we have confluence of some strong support with the Tenkan-sen, the middle pivot point level around 106.85, and then just below there, the Kijun-sen at 106.75.